Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Friday, the 25th of July. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Donald Trump turns to his favourite playbook of flooding the zone to attack the Federal Reserve Chair Jerome Powell, while simultaneously saying he has no plans to fire him.
Bloomberg learns that Citi pushed its global head of short-term interest rate trading to delete a social media post critical of Israel's actions in Gaza.
Plus, gorillas, grapes and Gulf billions will take you inside the rush to invest in ultra-luxury travel in Africa.
Let's start with a roundup of our top stories.
Federal Reserve Chair Jerome Powell is coming under increasing pressure from President Trump, who is employing what our senior national political correspondent Nancy Cook has described as a flood the zone strategy. Trump's approach involves personally attacking Powell, questioning the Fed's spending and discussing potential replacements, while simultaneously signalling that he has moved away from the idea of firing the Fed chair. Speaking yesterday, Trump downplayed his clash with the Federal Reserve Chair.
I think he's going to do the right thing. Everybody knows what the right thing is. Even people that believed in, the higher rates, they're all on board. They all want to see the interest rates come down. It's very important.
Trump's visit to the Federal Reserve was the first by a US president in nearly 2 decades. It comes as Fed officials are widely expected to hold interest rates steady for a 5th consecutive time at their meeting next week.
Now, sources have spoken to Bloomberg saying that ECB policymakers pushing for another interest rate cut face an uphill battle, with inflation at 2% and the economy in Europe withstanding trade turbulence. The central bank left interest rates unchanged on Thursday, pausing its year-long easing cycle amid ongoing trade tensions with the US. ECB President Christine Lagarde said the central bank is in wait-and-see mode, citing inflation at target and rising global uncertainty.
We are in a good place. And we are in a good place because inflation is at 2%, but we're not focused on data points. We're looking at all sorts of data, and our target is the medium-term inflation.
Following those comments from Christine Lagarde, markets paired bets on a September rate cut from the ECB. They now put the chance of a move at about 25% versus 40% before Lagarde spoke.
Sales of the luxury giant LVMH have fallen again as demand slumps in Japan and China. Revenue at the French group's fashion and leather goods division dropped 9% over the second quarter, a worse fall than analysts expected. But Jelenka Sokolova, senior equity analyst at Morningstar, says luxury demand in Asia depends on the strength of the region's economy.
The sentiment, I think, is affected by the real estate prices that remain in the negative territory and also by the economic growth. Once the real estate market prices stabilize, there could be an uplift and there could be additional spending of all those savings that have been accumulated during COVID years.
Morningstar's Jelenka Sokolova speaking there. LVMH has been suffering from reduced demand, particularly in China, traditionally a driver of growth. Shares in the firm have dropped by 30% in the past year, and in April LVMH lost its status as France's most valuable company to Birkin bag maker Hermès.
Australia and the UK plan to sign a £20 billion treaty in the coming hours to build a fleet of nuclear-powered submarines. The British Foreign Office says that more than 21,000 people in the UK will work on the conventionally armed nuclear-powered AUKUS submarine programme. The Times reports that the deal is part of an effort to persuade the United States to uphold the accord that was signed by former President Biden, which the Pentagon says is currently under review.
The British Prime Minister Keir Starmer says the UK is back on the world stage after sealing a trade deal with India. The long sought-after agreement was ratified on Thursday during Indian Prime Minister Narendra Modi's visit. It's the biggest trade deal struck by the UK since Brexit, cutting 90% of tariff lines on British exports to India. Speaking as it was confirmed, Keir Starmer emphasised the deal's selling points.
It is a deal that will bring huge benefits to both of our countries, boosting wages, raising living standards and putting more money in the pockets of working people. It is good for business and making trade cheaper, quicker and easier.
That's the Prime Minister Keir Starmer. He added the agreement didn't mark the limit of the UK's ambition and would provide a baseline of cooperation to build on. A separate bilateral investment treaty is still being negotiated between the two countries.
Bloomberg has learnt that Citigroup has pushed a trading desk head to delete a social media post that was critical of Israel and sought to draw attention to the situation in Gaza. Bloomberg's Ewan Potts has more.
Citi's global head of short-term interest rate trading, Akshay Singhal, posted on LinkedIn that he believed Israel's actions in Gaza were, quote, horrific and unacceptable, and calling them, in his words, genocide. Before the end of the day, though, we're told the bank had asked the London-based staff member to remove the comments. Citi says the post was inconsistent with its code of conduct and it's reviewing the matter. The trader did not respond to a request for comments. The move is the latest reflection of corporations' reluctance to take stances on polarising topics. In London, I'm Ewan Potts, Bloomberg Radio.
And the United States and Israel have withdrawn their negotiating teams from Gaza ceasefire talks. The Trump administration says Hamas is not acting in good faith. A key disagreement has been over Hamas's demand to bring back a UN-run aid network that Israel shut down, claiming Hamas was taking food and medicine from it. Prime Minister Keir Starmer is among world leaders who've condemned what he called a humanitarian catastrophe in Gaza, saying it has reached new depths. Dozens of aid groups have warned that starvation in the territory, particularly among children, is spreading.
Those are our top stories for you this morning. Let's look at the markets. So the global rally in stocks losing steam in Asia this morning. MSCI Asia Pacific Index is down almost 1%. Stock futures for the US are in the green, but for the US Stocks 50 futures, they're down 0.1%. We have seen the S&P 500, of course, rallying 28% since the 8th of April. So a huge surge in US stocks. And even yesterday, we saw European stocks gaining about 0.2% at the close. But there's now more uncertainty about the Fed's rate trajectory. Traders expect fewer than 2 rate reductions this year after strong jobs figures yesterday, initial claims for unemployment benefit, and the ECB kept interest rates unchanged. The Bloomberg Dollar Spot Index is also stronger, 0.2%. Stephen.
In a moment, we'll bring you more on Donald Trump's pressure campaign against the Federal Reserve Chair, plus how the billionaires are pouring money into Africa's luxury travel sector. But another story that we've been reading and sort of feeling as well this morning, it's about the heat on the Central Line in London. A frequent topic of conversation during the summer, but Bloomberg's actually developed an index to track the heat on the tube between Bank and Bond Street. On the 10-minute journey, we found that temperatures inside the carriages are several degrees hotter than the surface, and that weekday commuters have been facing the equivalent of non-stop heatwave conditions all summer.
I love the fact that Bloomberg has an index, but frankly, I didn't need one because I know that that's how warm the tube is. And I don't think it's just the Central Line either. Look, this is becoming a major issue because of climate change. And London is now seeing these warmer temperatures for so many more days. I mean, the warning now is that it's affecting the drive to get workers actually back into the office. It's affecting people's choice of jobs and where they live. It's really quite grim in London. The other thing that people forget also is that noise on the tube is also really, really loud, especially on old lines like the Northern Line. Yeah,
like we know that obviously it's an old piece of infrastructure, so there are problems to come along with that, but this is also to do with the clay soil under London too. So over time that's been absorbing the heat from the trains braking and acceleration, which has actually made the tunnels hotter over time. And some of the people that our colleagues spoke to during this story as well are saying that it's affecting where people are choosing to live, if they can live near one of the very few air-conditioned lines in London as well, but also affecting where they're willing to work, because some people just aren't willing to take the tube every day.
No, absolutely. And Olivia Rudgard writing about this along with other colleagues. So we'll also pin a link to that article in our show notes if you want to read more about the details of London's heating tube.
Well, let's go back to our top story this morning and the pressure Donald Trump is putting on the Federal Reserve Chair to lower interest rates through multi-pronged attacks. He used a tour of the central bank's building renovations in Washington to again call for Jerome Powell to, quote, do the right thing. Our Markets Live strategist Mark Cranfield joins us now for more. Mark, just put this in perspective for us. How unusual is it to see a US president wage a campaign like this against the Fed?
Extremely. And there must be a lot of investors scratching their heads because this morning in Asia, we had yet another record high on S&P 500 futures, which I think most people will probably agree is an indication that investors are pretty happy with what's going on in the American economy, with American companies making pretty good profits. We've seen some very good numbers this week from Alphabet. We've got some big ones coming up in the week ahead. So it's a bit head-scratching, really. Does America need an interest rate cut at this stage? The markets are certainly suggesting they don't. And yet there's been a lot of discussion and pressure being put on Jerome Powell all about it. And as you say, they met in person at a building site yesterday just to emphasize the point that America needs lower interest rates.
Yeah, and the difficulty is how to defend the institution. I think there's a bit of a struggle going on about how to understand that. Trump saying that it's not necessary to fire Powell. How are markets then viewing the prospect of the Federal Reserve Chair maybe being removed?
Basically, it will be taken out in terms of what happens to American assets. There will be a discount applied to anything related to America because of this uncertainty about the direction of the central bank and the way in which it's being undermined. The most obvious place for that would be the US dollar. If this gets serious, if there's no let-up in the attacks against Jerome Powell, then the US dollar will just have to go lower because investors will feel that it needs to be cheaper than other major currencies to reflect the fact that there is considerable uncertainty about what's happening to the central bank, that it's no longer as independent as it used to be. Any central bank which has a degree of strength behind it will have a higher premium in its currency, and that will have to be taken away from the dollar because of the Federal Reserve. It's early stages, but if they don't dial back from this continued approach, then investors will do it for them. They will show President Trump what they think about what it's doing to the credibility of all American institutions.
Okay, Mark Cranfield, our Markets Live strategist, thank you very much for joining us as we're looking at markets pricing, as we said, the Fed to hold interest rates at its meeting next week.
Now, there's been a surge in global investor interest in luxury travel destinations across African countries. From gorilla trekking to vineyard stays, capital is pouring into the sector from billionaires, tech moguls and Middle East investors who are stepping in to fill a funding gap left by banks. Our reporter Pranesha Naidu has been writing about this and she joins us now for more. Good morning, good to have you with us. Who are these investors and where are they putting their money exactly?
Remarkably, these investors are some of the most high-profile individuals in the world. Our story this morning spotlights an investment by the Dubai ruler, who has invested in a private island off the coast of Tanzania. We also have investors like Sir Richard Branson, who's picked up his second luxury safari lodge on the continent, or in Kenya rather, last year. And there's even investor interest from Asia with a unit of Nepal's only multi-billion-dollar company looking to invest on the continent as well.
So why are they seeing such an opportunity then in African destinations?
I think a lot of it has to do with a change in the way people started to travel after the pandemic. People are very much more interested in wellness travel, eco-retreats, and reconnecting with nature. And Africa offers that in leaps and bounds. And that's really driving a lot of interest in the high end of the market. At the same time, many of the world's top hoteliers and global chains see Africa as the last underpenetrated market for travel and tourism. So they're also rushing in.
What are the risks then, potentially, though, for investors? I mean, we always have to think about the risks and the benefits.
So our reporting shows that, and why we talked a little bit about a funding gap being left by banks, they typically only fund about 55% of hotel projects on the continent. And that's because there are some difficulties in forecasting bookings and revenue streams. In Africa, there's a unique issue where there are too few hotels in certain markets that report performance benchmarking data. So sometimes that affects the outlook for investments and the confidence with which some investors get in. There are also risks related to conflict, changes in political regimes, and how that could influence the overall business environment.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.